Hello, and a warm welcome to you, dear viewers, to the Smart Dollar Resource channel. We're thrilled to have you join us as we delve into a fascinating topic today, Big Debt Crises by Dalio. This insightful piece sheds light on the inner workings of the financial world and how understanding these can give us an upper hand. So, buckle up for an interesting journey, and don't forget to hit the like button and subscribe for more content. Do remember to check out the links in the description box for more resources. Your support means a lot to us. Diving right in, let's explore the crux of Big Debt Crises by Dalio. This insightful tome delves into the intricate patterns and cycles that typify debt crises. Dalio, a seasoned investor and hedge fund manager, distills his wealth of experience and knowledge into this comprehensive guide, decoding the seemingly complex world of financial crises. The book is a deep dive into the mechanics of debt crises, examining how they evolve over time and impact economies, both big and small. Dalio meticulously explores the life cycle of a typical debt crisis, starting with the initial buildup of debt, followed by the inevitable bubble burst, and finally the painstaking recovery process. A key theme that resonates throughout the book is the cyclical nature of debt crises. Dalio underscores that these financial calamities are not random, isolated events, but rather part of an overarching pattern that repeats itself over time. This perspective is crucial for anyone looking to navigate the tumultuous seas of finance and investment. Another insightful takeaway from Big Debt Crises is the concept of beautiful deleveraging. Dalio argues that not all deleveraging processes are devastating. When managed astutely, they can lead to a beautiful outcome, where economic growth is balanced with debt reduction. This enlightening concept challenges conventional wisdom and offers a fresh perspective on managing debt crises. The book also sheds light on the role of policymakers during a financial crisis. Dalio emphasizes the importance of strategic decision-making and coordinated efforts in mitigating the negative impacts of a debt crisis and steering the economy towards recovery. Furthermore, Dalio doesn't just dwell on the macroeconomic aspects of debt crises. He also provides practical advice for individual investors, offering valuable insights on how to protect one's portfolio during such challenging times. In essence, Dalio's Big Debt Crises is a comprehensive guide to understanding the dynamics of financial crises. It offers a wealth of knowledge that can empower both novice and seasoned investors to make informed decisions, navigate financial storms, and ultimately achieve financial success. Every piece of literature has its strengths and weaknesses, and Big Debt Crises is no exception. Diving right into the prose, Big Debt Crises stands out for its practical insights. Dalio, a successful investor, has generously shared his vast knowledge and experience in the world of finance. He provides a comprehensive analysis of historical debt crises, which can be an invaluable resource for those seeking to understand financial trends and patterns. His detailed breakdown of these crises, including their causes and impacts, can help investors anticipate and navigate potential economic downturns. Moreover, Dalio's book is not merely a recounting of historical events. He goes a step further to offer practical strategies for managing portfolios during times of crisis. This practical guidance can be a tool for mitigating risk and potentially even profiting during economic downturns. However, Big Debt Crises does have its drawbacks. One of the most notable is the complexity of some of its concepts. This is not a light read, and it may be challenging for those who are new to economics or finance. Some readers might find themselves needing to do additional research to fully understand the material. Dalio dives deep into economic theories and financial mechanisms, and while this depth adds richness to the book, it also raises the bar for comprehension. Another potential stumbling block is the necessity of a basic understanding of economics. Big Debt Crises doesn't cater to absolute beginners. Some prior knowledge of economic principles and financial markets is assumed. For those without this background, the book can seem daunting. But let's be clear, these cons are not necessarily negatives. They represent challenges to be overcome. The complexity of the book reflects the complexity of the subject matter. And the necessity for a basic understanding of economics? Well, that's just an opportunity to expand your knowledge and grow as an investor. The depth and breadth of Dalio's analysis, despite its complexity, make Big Debt Crises a valuable resource for investors. Now, let's delve into 5 critical lessons that Big Debt Crises teaches us. Firstly, understanding the nature of debt crises is essential. Dalio breaks down the complexities of debt crises into digestible parts. He teaches us that debt crises aren't random events, but cyclical occurrences that follow a predictable pattern. By being aware of these patterns, we can better prepare for future crises. Secondly, Dalio emphasizes the importance of diversification. Putting all your eggs in one basket is a risky move. Diversification not only spreads the risk but also increases the potential for returns. So it's crucial to diversify your investment portfolio across different asset classes and geographical locations. The third lesson is about the power of managing debt effectively. Dalio advises against excessive borrowing and encourages prudent debt management. Remember, debt can be a useful tool when used wisely, but it can also lead to financial ruin if mismanaged. Next, Dalio highlights the role of central banks in managing debt crises. He explains how central banks can use monetary policy tools like interest rates and quantitative easing to stimulate economic growth during a debt crisis. Understanding these mechanisms can help you anticipate market trends and make informed investment decisions. Lastly, Dalio stresses the significance of learning from history. He uses historical case studies to illustrate how past debt crises unfolded and were resolved. These historical insights can provide valuable lessons for navigating future debt crises. These lessons, when applied correctly, can significantly enhance your understanding and navigation of the financial markets. Each of these lessons serves as a building block in your financial education. They equip you with the knowledge to understand complex economic phenomena, make informed investment decisions, and ultimately grow your wealth. So, whether you're a beginner trader or an experienced investor, Big Debt Crises by Ray Dalio is a valuable resource that can help you on your financial journey. Armed with these lessons, the question now is, how can you use them to your advantage? Firstly, let's focus on understanding the economic machine. Ray Dalio's book gives us a crucial insight that debt cycles drive the economy. By understanding this, you can anticipate market trends. When debt is expanding, times are good. But when debt contracts, recessions happen. So keep an eye on debt levels, both public and private. Secondly, don't discount the power of policy. Dalio shows us that monetary and fiscal policies impact the economy in significant ways. When you understand the direction of these policies, you can better predict market movements. For instance, if the central bank is raising interest rates, it might be time to move away from bonds. Thirdly, recognize patterns. Big Debt Crises is a treasure trove of historical case studies. Studying them can help you identify patterns and trends, allowing you to make informed decisions. If a certain sequence of events led to a financial crisis before, it's likely it could again. Fourth, diversify your portfolio. Dalio strongly advocates for this strategy. Diversifying across asset classes and geographies can protect you from the damaging effects of a debt crisis. Remember, don't put all your eggs in one basket. Lastly, don't be afraid to go against the grain. Dalio often talks about the importance of independent thinking and investing. Just because everyone else is buying doesn't mean it's a good idea. Sometimes the best opportunities come when you swim against the tide. But remember, while these strategies can guide you, there's no such thing as a surefire bet in investing. Always do your own research and consider seeking advice from a financial advisor. Remember, knowledge is power, but only when you put it to use. So, take this knowledge, apply it, and start your journey towards smarter investing. After all, the aim isn't just to understand the big debt crises, it's to leverage that understanding to grow wealth in the stock market. And there you have it, a brief yet comprehensive guide to Big Debt Crises by Ray Dalio. We've explored its core theme, weighed its pros and cons, extracted 5 key lessons, and discussed how you can leverage this knowledge to your advantage. This book is a treasure trove for both budding and seasoned traders, offering insights into the patterns of debt cycles and the opportunities they present. Whether you're looking for a fresh start or need a refresher, Big Debt Crises serves as a powerful tool to navigate the complex world of trading. Remember, everyone starts somewhere, and knowledge is your most valuable asset. Now, to kickstart or elevate your trading journey, why not check out the broker app, MooMoo? When you sign up today, you stand a chance to win an Apple stock valued up to $190, depending on the current market price. That's not all. You could also get up to 10 free shares. A fantastic opportunity, isn't it? So, don't wait. Check the links in the description box and begin your journey towards financial growth. Thank you for joining us today on the Smart Dollar Resource channel. We hope you found this video insightful and valuable. Don't forget to hit the like button, subscribe, and share your thoughts in the comments section. Your feedback fuels our content. Until next time, happy investing.